All right, legends, I'm just reading through some of your comments over here. A lot of fear in the market at the moment. Saw some of the other influencers, social media, people talking about a bear market that's potentially starting at the moment. So what we need to do now is, well, let's go and assess the probabilities. Okay. The one thing about, let me just put this a little bit softer here in the background. The one thing about Elliott wave theory that I appreciate is that even in the worst circumstances, when people believe that the market is going in a certain direction, it gives clarity. Okay, it gives directional bias. And this is why I spend a lot of time studying Elliott wave theory, because I remember when we were here, people were talking about a bear market. And there was only a couple of channels, including Andy and myself, that said it's a corrective structure. We're going to claim the high again. Okay, because that's what Elliott wave theory, that's what makes it so powerful, is based on the movement down. You can very quickly determine whether it's corrective and you're going to claim the high again. And most influencers were calling, and social media were calling for a bear market. I remember during this dump, bull market is over. We're not going to claim this high again. And I kept on singing the song, we're going to claim that high. Okay, and during every single corrective structure, also this little drop over here, bear market is incoming. We have a 5-way structure to the downside. We're forming a 1, 2, 3, 4, 5. We're going to make a correction and continue momentum to the downside. Well, we claim the high again. Right, so now what I want to discuss is, has the bear market started? I know some of you might be saying that I'm smoking my socks, but I'm going to stay neutral over here and I'm just going to show you what I see here on the chart. Can we claim this high again before we start a bear market? Or is this the start of something really nasty and we are going to continue momentum to the downside? So guys, we're going to jump into the smaller time frames now. And if you were watching my live stream yesterday, you know, just to quickly point out, okay, I'm here on the Coinbase chart because for the moment, this is the cleanest chart. Most of the other exchanges on the charts, they have those nasty weeks to the downside that ended at different levels. So the Coinbase chart for me, for now, is the one that shows the best clarity. Also, for some reason, I went through the CME gap chart this morning, and this one looks super clean, super easy to analyze. Okay, so we're going to go and discuss that as well. And if we have time, we can maybe go and look at Ethereum. I have done some Ethereum analysis yesterday. Nothing has changed from the analysis that I did yesterday. I think the question on everyone's mind, and from the personal messages that I have received, and I see the fear in the market, I see YouTube influencers talking about bear markets and, you know, hopium is down the drain. Right, so let's keep it pure over here. Let's purely focus on the technicals, because remember guys, in a bull market, if you can find an opportunity where there's extreme fear, it's usually the best buying opportunity. I'm not saying, okay, we're going to analyze it now and see where we are and what needs to happen to confirm a bull market. Okay, so maybe to start, right, legends, remember to smash up that like button if you haven't done so already. Hi, Elizabeth. Welcome to the stream. Great to see you here. Staffa and Jack, the moderators in the house, always great to see you. Invert chart for hope. Right, should we do this, guys? Should we do this? Right, okay, we are always in a bull market. It just depends on your perspective. Okay, we are going up, guys. We are going up. Just click the right button when you do trade. Okay, we are going up. Okay, yeah, always great to invert the charts, especially on the D-line strategy. Anyways, we're going to go and analyze the structure in a moment. But one thing that I quickly wanted to point out here is that we are now at a high volume node that I pointed out yesterday. During this entire range, this is where a lot of volume was traded. Next level is around $96,540. The one thing also, guys, before we jump into the bear market possibilities, the one thing that I do want to point out is I see a lot of people are watching $100,000, the $100,000 mark. There's a lot of eyes on that level at the moment. A lot of limit orders at that level at the moment. And what I have seen, they just put a little line here on 100K. Okay, there's your 100K mark, more or less. Okay, let's make it nice and white so everyone can see, and thick. Okay, there is $100,000. There's a lot of eyes on that level. And what I know historically that happens almost every single time is that when there's a lot of eyes on a specific level, it either gets front run and forcing these people to buy in at higher levels, or you scare the crap out of them, you break the level, okay, maybe find support inside of this zone, and these people are going, what just happened? And then you find upwards momentum. So just something that I wanted to point out. But price for the moment is at support and it's consolidating. It's struggling to break down further. As you can see on the lower time frames, maybe I should use one of the charts for a little lower time frame analysis. Let's do this. Let's use my chart here on the 15-minute time frame. Okay, for the moment we are getting a little bit of a consolidation. Also, when I take a fib from the Binance low to the high, okay, we are tapping the 0.786 at the moment. Also bouncing on that high volume node. So price has fallen aggressively to the downside and now it's chopping. So perfectly fine to get those double, triple bottoms to the downside. Double bottom, looks like it's going up, triple bottom, and then eventually you get a little bit of a reversal to the upside. Very, very important for the bulls to claim these highs to start changing market structure. But I will jump through some lower time frame analysis in a moment. Now first, let's go back here onto the Coinbase chart, take out the scribble, and I want to show you guys, well, what happened during the previous bear cycle? How did it start? Okay, so we can do a little bit of comparison. How does a bear market typically start? So if I go back to the previous bear market, okay, this is where all hell broke loose. After we made this high, we went into a massive bear market. But from a structural perspective, what happened? Okay, so let's zoom in a little bit over here. First thing that you have to notice is that we formed a 5-wave structure to the upside. 1, 2, 3, 4, 5. You have a 5-wave structure to the upside. That's great because usually, in most instances, a bull market ends in a 5-wave structure. And then when the dump started happening to the downside, we had a 1, 2, 1, 2, 3. Okay, exactly like we saw now with that week, 4, 5, 4, 5. So you started with a double 1, 2, you ended with a double 4, 5. And then you have this gap here in the middle. That's where the bear market started. But so you basically also start a bear market with a 5-wave structure to the downside. We had a corrective structure, very overlappy, no impulses here to the upside. We formed a lower high and we continued the bear market. Okay, so 5-wave structure up, 5-wave structure down. Now, if I compare this to where price is at the moment, okay, let's go back. And I'm just going to stick here to the 8-hour time frame so we can see the candles nice and crispy clean. Well, this move ended, as you can see, this move ended in a 3-wave structure. 1, 2, 3. There's no 4 and there's no 5. So we have a 3-wave structure. Technically, it is very rare to end a bull market with a 3-wave structure. So based on this theory, whatever happens here still means that there's a high chance you're going to claim that high before you start momentum to the downside. And then you have to ask your question, okay, well, what can end in a 3-wave structure? Okay, but I'm going to get to that question now. For now, we have a 5-wave structure to the downside. We have a 1, 2, 3 most amount of volume. We claimed the low, and you could argue this is a 4 and this is a 5. So we do have a 5-wave structure to the downside. But here's a little bit of a problem. You have a 3-wave structure up, and you have a 5-wave structure down. Now, usually, legends, okay, let me just paint this out for you, okay? Let's do this. A, B, C. Let's put on the line. Let's make it nice and big. I'm going to go slow. We're going to be, it's Friday, guys. It's a relaxing day, okay? I'm going to take it slow. We're going to take it easy. Okay, a flat corrective structure is is the most common corrective structure on Bitcoin. So you have 1, 2, 3, 4, 5 waves to the upside. Okay, let me draw this out for you. Make it nice and big so everyone can see. So this is a typical flat corrective structure where you have 5 waves to the upside, and you have an A, a B that takes the high, and a C that takes the low of A. That is a flat structure. They are very common in Bitcoin because they reset the market. Everyone that gets super bullish over here, longing, we're going to claim that high. Eventually you claim the high, and you have your breakout traders, and you basically, for all the people that shorted over here, you liquidate them because they have all their stop losses here because they saw the 5-wave structure and it's going to be a deeper correction. And then everyone that got super bullish over here, their stop losses are over here. So you wipe them out, and then it continues. This is the reason why there's a flat corrective structure. It resets the market. It wipes out everyone that shorted, and it wipes out everyone that longed. And then it continues once the funding rates are reset and, okay, forcing people to buy in either at higher levels. Right, so I want to compare this structure to, well, can we see a similar structure here at the moment? So, we do have a 5-wave structure. 1, 2, 3, 4, 5. We have a 5-wave structure. Now one could say, okay, well, this looks like a beautiful corrective structure. You have an A. You have a 3-wave structure in B, which has to be a 3-wave structure, by the way. B waves has to be a 3-wave structure. And guess what? A C wave has to be a 5-wave structure. So for the moment, this structure actually looks incredibly nice. Okay. You have 5 waves up. You have an A, a B that took the high, and now you have a C that took the low. Right, and this little bad boy over here does have targets. It has targets, and it just hit one of the targets this early this morning again, because I pointed this target out to our Legends Pro community, and I said, well, how you measure a C wave is, okay, and I just need to take it out so that I can draw the fibs properly. You take a trend-based fib extension from the high to the low of A to the high of B, okay? And you can see, well, where is price currently getting a little bit of a reaction? It's getting a reaction at the 1.236, which is a C wave target. So A, B, this is the first C wave target. You can still go to the 1.382, which is very common. I have often seen C waves turn around at this level. So if market makers wants to front run this $100,000 area that most people are eyeing, well, it needs to do it over here. Okay, and then for the scary momentum to the downside, the 1.618, which is $98,000, 500 or 459. I have seen C waves go to the 2 extension as well. I have seen it, not often. It is considered a little bit of a rare target, but it can go to the 2 extension as well. So for now, if market makers wants to do a front running exercise, I believe it's going to happen in this zone. If market makers wants to scare the shit out of everyone over here, I believe it can go to the 1-to-1 extension and even the 2 extension over here. Because when I look at the entire structure, Okay, if you look at the entire structure, structure always comes first before anything else. You have a low at $74,000 and you have a high. And even if price comes to the 2 extension, we're now talking worst case scenario. I do see this as worst case scenario, the 2 extension over here. Guess what? You still have a higher low. The market structure is still intact. You have higher highs and higher lows. And you could still continue to the upside. And this could all be part of your A, B, C to the downside, and you start finding upwards momentum. Okay, so from a technical perspective, it would be very strange to end a bull market with a 3-wave structure. Okay, and there's a possibility that you have your 1, your 2, your 3 with the most amount of volume. That's what you want to see. You want to see the most amount of volume in your 3rd wave. And then you take the lows again on decreasing volume, which is happening at the moment. Okay, so there's a chance that this structure could find its feet in this zone from a front running perspective. I just want to highlight these 2 levels are also still valid. But I have seen it many, many times. And for those of you that's been following me for a while, we've often spoken about the front running zone, where we just front run the zone. And then that happens. And I said, guys, there's too many eyes on this level. We're either going to front run it or we're going to scare the crap out of everyone. It's now confirmed. We now have a confirmed bear market. Sell everything. And then the bull market continues. But it's still at the levels that it needs and can find support because the structure is still intact. Okay, now I want to talk about, well, can this be the end considering a 3-wave structure? So we have the potential or the possibility or a probability that it's very rare to end something to the upside in a 3-wave structure. It has to end in a 5-wave structure. So now we have the probability and the possibility that this could be an A, a 3-wave B, and now we are finishing up the C wave. You still form a higher low in the zone, and we continue the bull market to the upside. The only bearish case scenario that I see, and I need to go back to my other Bitcoin chart. Okay, let's just do a little bit clean up over here. Switch off the levels. Let's go to 12-hour time frame. Should be fine. I want to go to the log scale. And now we need to discuss, well, can something end in a 3-wave structure? And maybe before I discuss that, just want to see something over here. Update on your course timeline release, please. Highly needed. Yes. You know, from a trading perspective, you don't care if it's bull or bear market. You just trade the levels. Okay. You just trade the levels. It doesn't really matter. So one thing I need to drop this little bit of education. So what I'm about to share makes sense. Okay. The only way in which you can end something to the upside, okay, in a 3-wave structure is the following. Let's just keep it simple. Okay. I'm going to try and draw it out as nicely as I can, but it needs to be slightly contracting. You get the 5th wave, you get the 4th wave. And this is what we refer to as an ending diagonal. In an ending diagonal, each structure has to be a 3-wave structure. It has to be a 3-wave structure up, a 3-wave down, a 3-wave up, a 3-wave down, and you guess what? You get a 3-wave structure to finish your 5th wave, and then you fall down and you claim the low. Bear market, bull market. Okay, so the only structure that I have already prepared, and I actually have shown you guys the structure already, by the way, okay, is, let me see if I can find it here, macro ending diagonal. Here we go. Okay, on the 12-hour time, well, let's put it here on the daily time frame so we can see everything nice and crispy clean. Okay, take this out the way. Right, so we started the bull market at $15,500, give or take. We formed a 1, a 2, a 3, a 4, and now we're ending things in a contracting ending diagonal, of which each structure needs to be a 3-wave structure. Okay, so for now, one could argue, right, maybe we do have, okay, a 3-wave structure up. Doesn't look pretty, it does count better as an impulse. You have a 3-wave structure down, you have a 3-wave structure in a 3, and now the question is, okay, the 5th wave can be in, because if you zoom into this price action, all the 5th wave has to do is take the high of 3. Okay, I'm going to place it there. So that little 5th wave did take the high of 3. And it moved up in a 3-wave structure. So yes, there is a chance that your 5th wave is done in an ending diagonal on the macro time frame. Okay, just needed to point this out, guys. It's not something that we want to talk about. We still want the highs to be claimed. It just has to be said that it would be very strange for the 5th wave to not at least tap the minimum target that I have at $139,088. It would be very strange because the higher the time frame, the more accurate the analysis becomes. And this is my minimum 5th wave target for an ending diagonal. But the minimum requirement, which is also considered rare, is that your 5th wave at least claims the highs of 3, which it did. So is there a chance for the bear market to start? Yes. Are the probabilities high? No. The previous scenario that I've just shown you, okay, where this is part of a corrective structure, an A, B, C, and we continue, carries higher probability because it's very rare to see a 5th wave literally just grab the liquidity, not even closing daily candles above the level. It just leaves wicks behind. You at least want some daily, weekly candle closes above the 3rd wave to give it higher probability. Okay, but what I wanted to point out over here is that yes, you can end in a 3-wave structure, in an ending diagonal. It's just, it's not a beautiful end. It's a very ugly end. Okay, I would at least expect for this to happen, at least at a bare minimum. Okay, we're busy now here with the 4th wave. Remember, this trend line can still move a lot as long as it stays contracting. Okay, so potentially this is still your 4th wave over here, and we go up and we complete one more high to the upside. This has the higher probability than ending the 5th wave over here. Okay, but can this be the end? Yes, and what you need to look out for next. So remember, impulses to the downside, like I've just shown you with the previous bull market. Now price needs to form a 1, 2, 3, 4, 5. It needs to claim all the lows on all the exchanges. It needs to claim all those goddamn lows. Okay, you want to see a 5-wave structure to the downside. Then you want to see a 3-wave corrective structure, very choppy, very messy, like this. You know, it's chopping all over each other. There's no clear impulse to the downside. Very corrective. You want to see a corrective structure to the upside. That presents a shorting opportunity for continuation to the downside. If price stops here and it forms a 5-wave impulse to the upside, well, then that correction is going to be very interesting for long to go and claim the highs once again. So we need to wait and see how price is going to develop. But there's a possibility, okay, because I got this question a lot of times to say that, Dewald, we have a 3-wave structure to the upside. Is there any chance that this could be the end? Is there any chance that this could be the end? Because it's a 3-wave structure. How on earth do you end something on a 3-wave structure? You end something in a 3-wave structure, okay, in an ending diagonal. So there you go. From an educational perspective, ending diagonals always ends in 3-wave structures. But then all the structures has to be 3-wave structures. Okay, so this structure needs to be a 3-wave structure, and it counts better as an impulsive structure to the upside. 1 2 1 2 1 2 3 4 5 4 5 4 5. It's very difficult to count this structure as a three-wave structure, and this is why I'm giving this scenario the lower probability. Okay, corrective structure, yes, they're always three-wave structures, so I don't have to count them. But then, yeah, also, I can count a 1, 2, 3, 4, 5. No, it needs to be a three-wave structure. Okay, so there's a couple of problems with the scenario, but to answer everyone's questions question that has been asking me, can you end on a three-wave structure? The answer is yes, you can. But I'm also pointing out the problems with the scenario. There's a lot of problems with the scenario. Can it happen? Yes, sometimes the lowest probability scenario does play out. But from an education perspective, if you have an ending diagonal, okay, all structures has to be three ways. 1 2 3 1 2 1 2 3 1 2 3. Okay, and obviously your corrective structures are always three-wave structures regardless. You finish the fifth wave, that's regarded as an ending diagonal, and you go and you claim the lows again. Right, I just want to see, well, what is the results of the poll? Because I started a poll. 61% of you still believe that the bull market is intact. And it's kind of in line with what I'm seeing technically as well. So is there a chance that we are starting a bear market to the downside? Yes, but it carries low probability. There's a much higher probability that we claim the high at least one more time, and then we can start talking about a bear market. Okay, and I'm not saying it has to happen. I'm not saying it's guaranteed to happen. I'm just saying that technically the probabilities are higher that we claim that goddamn high one more time. Okay, so if it wants to be an ending diagonal, let's just claim it properly there at the minimum target of $139,000. By the way, guys, I really enjoy my smoothies in the morning, and I changed from blueberries to blackcurrant. Oof, the blackcurrants are so nice. They're so nice and sour. Anyways, just something personal. Right, so this scenario, and believe it or not, the scenario that still carries the highest probability, okay, is this one. No one wants to talk about it. Everyone is fearful. I see I saw a very famous YouTube influencer this morning highlighting that it's the start of the bear market. And I was just like, well, there's still a lot that needs to happen before we can call for the end of a bear market. Okay, structure always comes first. So regardless of which Elliott wave theory I'm highlighting to everyone, structure always comes first. What do I mean by structure always comes first? You have a low and you have a high. Okay, you have a high, you have a high, you have a higher low, you have a higher low, you have a higher high, a higher low, a higher high, higher low, higher high, higher low. And guess what? For now, we still have a higher high. And where price is at the moment, we still have a higher low. Structure always comes first. The trend is still up. And the trend is your friend until the trend is broken and you start forming lower lows and lower highs. Okay, just imagine, guys, if this is the 1 minute time frame, you're now looking at price, going up here in the 1 minute time frame. The first thing you're going to do on the 1 minute time frame, if you're a scalper, is you're going to say, okay, well, this has gone up pretty far already. Let's put a trend, okay? Let's put a little bit of a trend over here, okay? Connect those lows. For me to short here on the 1 minute time frame, I want to see price break down, and I want that low to be claimed. It needs to break down. It needs to come back for a retest, okay, make a lower high and continue. That is where I'm going to short. That's my trading plan. I need price to fall down, create a lower low. I need price to retrace, make a lower high, and then this is my shorting opportunity. Price is still very far away from there, okay? And for now, the trend is still intact. Trend is still up. Okay, let me know in the comments, what do you guys think? Because I do see that there's some people here in the comment section that's like, the bear market has started. Dewald is smoking his socks. Blazing Fury, I appreciate your support, man. Always see your comments here in the live stream. Dewald, I'm scared but holding tight. I am literally so done with this. Yes, and you know, that is how everyone's feeling at the moment, okay? I think we had this massive crash. Let's go here onto the 1 hour time frame. Okay, we had this massive crash here to the downside, and everyone believed that we will not be able to fall this week. It's impossible to fall this week. Well, here we are, right? We still have a higher low on most exchanges. But on the Coinbase, we've already taken the low, okay? Which is now what I want to see. We've taken the low. Thank goodness we've taken the low. Because that's what you want to see in an ABC flat. You want the low to be taken properly. You want to see the A, the B took the highs properly. Okay, can you see how choppy it got? The 3 pivots. Got the pivots, the 4 5s to the upside. Well, you could expect the same thing here. You know, it gets choppy, it creates those pivots, and it starts turning around. Okay, but you want to see price curling over. You want these lows to be made on lower volume, which it is doing at the moment. Okay, so very interesting zone for me to pay attention. Okay, and I mean, these drops are never pleasant, guys. It's never pleasant, because I mean, this little dump had an absolutely devastating effect on altcoins. It just, I haven't seen altcoins bleed so much. I mean, some altcoins even going to 1 cent, 0, minus. They went into the minus. An absolute massive liquidation event that just happened on the altcoins. Okay, and Bitcoin just held its ground, right? But now we do have a fight. You know, the danger now is, okay, let's ignore the Elliott wave scenarios. The danger is that you do now, for the moment, have a 5-wave structure to the downside. So you could get a 3-wave structure up and continuation. And you form a 1, 2, 3, 4, 5. Okay, then I want this low to be taken, because this retracement is going to present a great shorting opportunity, and also an opportunity for me to start exiting some of my positions. Okay, but I need market structure to be broken. I need confirmation. For now, the structure is still intact. So yeah, I know, guys, I know it's scary. Some people lost a lot of money. Okay, can we still have 3-wave correction up as part of a bigger WXY, not bear market? Yeah, so let's quickly go through that. Dimitri, very good question. Yes, we can still have continuation. So the one thing that I do want to point out is that, okay, you have a 1, 2, 3, 4, 5 in a contracting diagonal. Okay, at least now what I've said from a timing perspective, it's time. The correction is now in a zone where it is time where it can end. Okay, so if you're going to form a larger corrective structure, yeah, I mean, there's still a lot of time. You can even have a corrective structure that goes to the 2, okay, which is next year, end of Q1 next year. But yes, when you have, okay, you always have to consider this. You can have an A, B, C, and after you have an A, B, C, that gives you a W. Okay, but you always consider an ABC first. If the correction continues, then you label the ABC a W. So I'm now considering the ABC first before I consider a W. Okay, if this happens, okay, and it falls again, then you can label that X. And then you can have an A, B, C in a Y. So yes, the correction can still continue in a W, X, Y. Okay. Still a lot that needs to happen to give this scenario the highest probability, because your Y wave ends in a 3-wave structure or in a triangle, depending on how high the X wave goes. So to answer your question, yes, you can still form a larger corrective structure, of which this now is completing your wave W. Then you get a 3-wave structure in X. Depending on how high the X goes, that will give us a couple of scenarios for how the Y wave is going to play out. Okay, let's go through some more comments. 1.6, yes. 2020 bottom. 2020 bottom. Let's go here to the daily time frame. $20.20. Are you going even back, further back? Okay, guys, I'm not going to do that much high time frame analysis, but I know what you're talking about. Okay. Right, so the most important targets, just to refresh everyone's that's joined a little bit late, the most important target I am looking at the moment is the following. Okay, we're currently getting a reaction at the 1.236. If it slices through and it just wants to continue falling, the next level that I'll be watching is the 1.382, and then maybe we get the front running in the zone because there's a lot of eyes on $100,000. Okay, so if the market makers wants to do a front running, they need to do it here. Okay, and if all hell breaks loose and we go and we start claiming these little pivots and find support inside of this consolidation, 1.618 and the 2 extension, always also C-wave targets. Okay, the 2 extension is already overextended, but I have seen C-waves tap this target. Okay. So that is basically what I wanted to discuss inside of this live stream. So what I want to do now is just go into a little bit of smaller time frame analysis. Okay, just want to see, well, how did this structure start here to the downside? Okay, I mean, the only structure that kind of makes sense over here, if you want to end a 5th wave, and maybe it's coming to an end. It's already 1, 2, then you have an expanding structure. Okay, guys, and I'm not going to go through this count at the moment. It's so confusing because some exchanges has this week, some exchanges doesn't have the week. Coinbase took the low for the first time now. Some exchanges we have not taken the low. Okay, so all I'm highlighting is the most important areas to keep in mind is where we are at the moment. Maybe we get that triple bottom and we start going up, or maybe it falls a little bit further. Okay, 1.382 on the higher time frame. Like I've pointed out yesterday as well, we do have a lot of volume that could support the bounce over here at the moment. Okay, I like to use the VRVP from a volume perspective, so you can see excuse me, at the 1.382 we have this little high volume node over here. Okay, where price is at the moment chopping, we have this mountain of volume over here, so there's definitely a chance that price could find support. Okay, point of control, where the most amount of volume was traded inside of this structure is at $96,556, just below, okay, the 1.618. So, you know, if the market makers wants to send it a little bit lower, then, you know, definitely an area where I will be paying attention. Yes, don't try and catch falling knives. I agree. Jay Payton, don't try and catch falling knives. Definitely, guys. From a spot perspective, if you want to buy the dip, by all means, because you can't get liquidated. You just buy a little bit more every month. That's part of my strategy. I buy Bitcoin every single month. I don't care what price it is. I buy Bitcoin every single month from a long-term perspective. Okay. But from a trading perspective, you need to have some experience in order to catch the bottoms properly with good risk management. Okay. Dewald does not get wrecked. Practice good. Yes, Dewald does not. I do not get wrecked, guys. I do not get wrecked. Okay, yes, I am down on my altcoin portfolio, but I got stopped out. Very important. I got stopped out of my swing trades on the altcoins that I had open. And I got stopped out with profits. Okay, little bit of profits. I was leaving the bags open because I believed that I had really great entries. And then all disaster hit on Friday, and luckily I had stop losses in place above my entries. Okay. So no swing trades for me at the moment. I am in no swing trade at the moment. Okay, the only trade that I am considering at the moment from a swing trading perspective, which I'm not in just as yet, is this zone. I'm very interested to see how price is going to react in this zone, for potential to go and claim that high again. But make no mistake, I will be taking profits to the upside because that's part of my strategy. I identify my profit taking areas and I TP myself out of the position, because if price wants to decide to turn around, maybe we form that larger WXY, for example, then, well, at least, you know, I took some profits on the way up. I get stopped out at break even and no loss on my side. The best thing that you can learn in trading is to manage your risk. Okay, it's the best thing that you can learn in trading because it's the only thing that you can control. People, you only lose if you sell. Yeah, from a spot perspective, definitely. Okay, but I saw people even with 2x positions. Oh, very interesting. When I only look at this price action, we're actually here at the point of control where price is, you know, getting the reaction. I saw people with 2x swing positions liquidate their accounts, and you would think that 2x is safe. Okay, it's a safe position. People got liquidated with 2x positions. This is why even when you are doing swing trading, you have to have a clear invalidation with a stop loss. Especially on the altcoins, we saw what happened, you know, and it seems that every Friday now we're getting these dumps. Okay, every Friday we're getting the dumps. Not great. Binance is crazy. Atom USD on Binance went to 0. Yes, I was actually a little bit confused because I looked at Atom on last week Friday and I was like, Atom only down 6%. Wow, Atom is so strong. Okay, and then someone pointed out to me, Dewald, you are looking at Atom on the Coinbase chart. Go look at Atom on the Binance and the Bybit charts. And then I saw that week to the downside. I was like, holy crap. Okay, so I mean, Atom on the Coinbase chart still looks great. Okay, it looks like it's holding up strong. It's still forming a high and low, but it went to 0 on most of the other exchanges. Anyways, okay, last week Friday was just an absolute horrific event for most traders. Great stream as always. Watch and listen. If you are watching, smash the like button. Dewald helps us understand the market. We help his algorithm. Thank you so much. Much love, brother. Watch and listen. I appreciate all the support that you guys do provide. Okay, I'm also just trying to provide a little bit of calm amongst the chaos. I see there's a lot of fear at the moment, guys. There's still a lot that needs to happen before we can start talking about a bear market. Because remember, okay, let's just say for argument's sake, we are inside of a bear. We've just started. Let's say this is the high. Okay, we're going to go into a bear market. You have to remember, whatever goes up must come down. Okay, like what happened here. You have a 5-wave move up, 1, 2, 3, 4, 5. It has to come down and retrace itself. So for the moment, when you look at this structure, okay, we have, for now, looks like a 5-wave move forming to the downside. 1, 2, 3, 4, 5. Once the 5-wave move is done, it has to correct itself. Okay, it has to correct itself. So let's say this is the top. We form our first 5-wave down. We form a 3-wave structure up. And then we go back down in a bear market. Well, okay, you don't have to short, guys. You don't have to jump into shorts here. The shorting opportunity still needs to come. There's still a lot that needs to happen before we consider swing shorts to the downside. For now, and dare I say this, for now, the probabilities are still higher that we're going to claim that high at some point, based on the technical analysis, based on this being a 3-wave structure, and based on the ending diagonal having a couple of issues inside of it. So from a probability perspective, the probabilities are higher that we claim the high again before we start a potential bear market at the moment. Okay, Legends, that is unfortunately all I have time for. Thanks for smashing up that like button. If you want to join our Legends Pro community, where myself, Andy, Dylan, the coaches, provide some trading setups and technical analysis on a daily basis. Links are always down in the description of this video that you're watching right now. If you want to support the channel, use some of the amazing bonuses that they have available. No KYC. Links are also down in the description. Have yourselves an amazing weekend. Please trade safe, practice good risk management, and I will see you in the next one. Cheers for now.